Hello, this is Angela Powerhouse Williams, and on today's training video, I want to share with you how easy it is for you to get a pay raise on your job and how to adjust your W-4 correctly. So the easiest way for you to do it is for you to go directly to the IRS. And the IRS has this amazing tool called the Tax Withholding Estimator. And what I want to do is I just want to go through it really quick so that you can see how easy it is to know exactly how many allowances you qualify for directly from the IRS, okay? So in this example, I'm gonna assume that I am a single mom. I have one child. I make $65,000 a year. They take out about about $500 every paycheck. I suggest that you have your pay stub with you. You're gonna need that in order to complete this exercise. So get your last paycheck and let's get started. So the first section is all about you. Okay, so what you're going to do is you're just going to go through and you're just going to answer the questions. Okay, it says, what is your filing status? In this situation, I am single, but I do have one child. And because of that, I am considered head of household. Please keep in mind that if you are married, whether you are filing separately or you are filing jointly, you cannot claim head of household. If you are single and of course don't have no children, you cannot qualify for head of household. Then it asks, can anyone else claim me as a dependent on their tax return? In this situation, no. It asks me how many dependents do I plan on claiming. Now, here's an example of dependents. Dependents is your children that are under the age of 18. And also, unless your children are in college, then they can qualify as well. If you have any children that are over the age of 21 that are not in college, but they're living in your home, and you qualify for you pay 50% or more of their living expenses. They're not considered a child, but they're considered a dependent. And there is some special criteria that you can meet if you're in that situation. Also, if you have, let's say, a grandmother or a mother or father that is living in your home and you are taking care of them and they're not receiving Social Security, they also can be claimed as a dependent. So in this situation, I have one child that is under the age of 18, so I'm just going to put 1. The third question asks me, do I have a job and I'm paid regularly? And in that paycheck, do they take out federal income tax? Yes. They also ask me, how many jobs do I expect to hold this year? In this case, I have one job. They also asked me, will you receive income from a pension this year? Why? Because pension income is considered as ordinary income. So that is an important question to be able to answer. In this case, no. Section 5 says, check any of these situations that may apply to you. If you receive Social Security benefits, you would check it here. If you have an investment account and you know that you are pulling money or selling investments and you're going to earn profit, you can put it there. If you earn significant dividends, you can report that as well if you like. If you collect unemployment insurance at any time throughout the year, you're going to check mark. And if you earn any self-employment income. Now, you all have a business in my econ. If you have already earned some income in my econ, you have received commission check deposits, then you're going to enter that income as well. If you were in my econ last year and you know pretty much you're going to be earning about the same amount you earned last year, you could enter that information here as well. It also asks you if you are over the age of 65 or are you legally blind. And this will help determine whether or not you qualify for the exempt status. In this case, none of these will refer to me because I just started in my econ. I only made about $50 in income, so it really isn't a big deal for me to even include that income on here, okay? So I'm just gonna click next. Now, if you normally earn over $600 in my econ, make sure you go ahead and put the net income that you normally get. Now let's go to the second section, which is income and withholding. So it's going to ask me about the job. It says, do you expect to hold this job all year? Yes. Then it asks me, how often do I get paid? Well, I get paid every 2 weeks. Then based on my paycheck, they're going to ask me, on what date did your most recent pay period end? So in this example, I'm going to say that my pay period ended on the 1st. I'm just going to say on the 1st here. Okay. Then it asks me, enter the total wages that I expect to receive this year. So how much do you make a year? In this case, I said $65,000. The next question, enter any bonuses. So if you receive a bonus every year from your company, you could put that here. It also says using your most recent pay stub, enter the federal income taxes withheld from your paycheck. So the current pay period, how much federal taxes did they take out? In this example, they took out $500. The next question says, how much federal taxes have they withheld so far this year? So you're going to look at the year-to-date field for your federal income taxes. And in this case, they've already taken out $8,000. The next question, did you or will you contribute to a tax-deferred retirement plan? So if you plan to contribute to your 401k, you're going to put yes, or if you have been contributing to your 401k, you can put yes, you can put how much you contribute to it. In this case, no, I have not been contributing. Then it asks, do I contribute to a HSA, FSA, or any child care credit account, like a cafeteria plan? And in this case, no. Click next. Now I'm about to go to the third section. And the third section, which I love, is called adjustment. And this is where, because now you are a business owner, you qualify for additional allowances, and it's powerful. So what you're going to do is you're going to click See Adjustments. Now, normally people who qualify to do this area are people who probably do itemized deductions. So the way the tax year worked yesterday with the people who taxes that I was doing last year, most people did the standard deduction, because your itemized deductions have to be more than the standard deduction in order for you to get it. So that means if you're paying mortgage interest, real estate taxes, you might be paying student loan payments, and you get to deduct the interest. If you add all that up, and let's say you had a household, if that amount is now over $18,000, they're not including that into your taxes. They're just going to give you the standard deduction. Okay, so for most people, they did not qualify for this. But guess what you do get? Because you are a business owner, you get to fill out this last box, which is called certain business credits, okay? And so what I want you to do to fill out this box correctly, I want you to add up the monthly totals of these 3 lifestyle expenses. And that is, I want to know what your monthly rent is, plus your car note, plus your cell phone bill. Add those 3 bills together and come up with a monthly total. So for example, if my mortgage was $1,200, my car note was $400, and my cell phone was $100, that's $1,700 a month in living expenses. So I'm going to multiply that by 12, and that's going to give me the number of $20,400. Now, why am I doing that? Well, there are hundreds of business write-offs that you can qualify for, but just for the W4, I want to narrow it down to just these 3 expenses. But I want you to track everything, because you're going to need it at the end of the year. So in this example, we're going to put down $20,400, and we're going to click next. The fourth section asks for deductions. And so basically, they're going to ask you, what did you basically do last year? Did you file standard deduction, or did you do the itemized deduction? So once again, it tells me that I qualify for the standard deduction of $18,350, even as a business owner. So just because you're a business owner does not mean you have to do itemized deductions. You can claim standard deduction and still get your business write-off. So in this case, Unless my itemized deductions is over $18,350, I'm going to take the standard deduction. So we're going to click that, and we're going to hit enter. Now it's going to ask me, do I qualify for any tax credits? And the best way to fill this out is based on what you got last year. If you don't know the answers to this section, you're just going to click get my results without the tax credits and just click next. Okay, in this case, I want to say see tax credits because I know I did qualify for tax credits last year based on this example. So it says you said you have 2 dependents. Is that correct? I'm going to say yes. And basically it's going to ask me, did I qualify for the child tax credit? Enter the number of qualifying children under the age of 17, okay? So let's say for this example, I only have 1 kid that is under the age of 17, but I have another dependent that is in my household. That's my child, but they are over the age of 17, but I am paying for more than 50% of their living expenses because let's say they didn't go to college, but they have not got a job yet. So in this case, I'm going to say I got 1. And then it asks, do I get the child and dependent care tax credit? That means, are you paying for daycare expenses for your child and you qualify for a tax credit? In this case, no. So I'm going to hit 0. They also asked me, did I qualify for the Earned Income Tax Credit? Did you get the Earned Income Tax Credit last year? If you do not know the answer to that, just select 0. If you do, then put it here. In this case, I did get the Earned Income Tax Credit for 1 of my children, okay? And then they have a section here, if you earned an adoption tax credit. If you did, you can enter an amount that I'm going to skip, okay? They do have tax credits for certain types of education, retirement savings, but I want you to leave all of that blank, okay? Even if you qualified for it on your tax returns last year, leave that part blank. Hit next. Now we're getting to the results. This is the end. And basically what the IRS is telling you that based on the information that you put in, they're telling you what your anticipated tax obligation is going to be. So basically what they're saying is based on my income, based on the number of dependents that I have, based on the fact that I have my child tax credit, and the fact that I have over $20,000 in just write-offs, business write-offs, and that's not even including other write-offs that I'm qualified for. But if I got $20,400 in write-offs, it's telling me that my tax obligation, $376. But if I did not adjust my W-4, look how much they're taking out of my paycheck, over $12,000. And if you subtract the anticipated tax obligation, that means that my overpayment is $11,624. You mean to tell me that you will overpay your taxes over $11,000? Why would you do that? You mean to tell me that you couldn't have used that $11,000 and put it into your savings account, or used half of that money and paid down some debt, or used half of that money and put it into your retirement account so your money can have babies? Or what if this $11,000 is your opportunity to get a brand new house? This could be down payment. It could be closing costs. But let's say you qualify for a home loan and you didn't have to come up with down payment and closing costs. That's $11,000 in your emergency savings fund, okay? Maybe you have a dream business idea that you would like to launch. $11,000 may could help you get to a point to now you are owning your own business and you're adding another stream of income. You see how powerful this is. And if you would just share this information with people that you love so they can see firsthand how much they're overpaying and how much money they're giving to the government and loaning to the government to wait to get a refund check at the end of the year, okay? So here's what it tells you to do next. It asks you, so what do you want to do? The first option is get my balance close to 0. So what that means is I want to adjust my W-4 and I want to make sure that I break even. I don't owe the IRS, but I want all my $11,000. Now, the second option is I just want a refund check. Then in that case, don't adjust your W-4, let them take the 11,000 out, and hopefully you get some of that back come tax time, okay? But for those people who need your money now, who would like to invest your money now, who would like to earn interest off your money now, whoever want to stop living paycheck to paycheck now, you're going to click get my balance close to zero. And what the IRS is going to do is tell you the number of allowances you're going to be able to claim so that you break even. So based on the W-4 form, they are telling you that you need to complete lines 1 and 2. So they're talking about the little W-4 certificate that you turn into HR that asks us how many allowances you're claiming. So they said complete lines 1 and 2, which is basically asking you your name and your address, your social security number. On line 3, they says check the box that says single. And then on line 5, they want you to enter 15 allowances. This is what the IRS is telling you, that you can claim 15 allowances. On line 6, you're going to enter 0. Line 6 is basically asking, do you want them to withhold additional money out your paycheck for taxes? In this case, you don't. You're going to enter 0. You're going to sign, you're going to date the form, and you're going to give it to your HR department. And when they process it, they'll no longer be taking federal taxes out your paycheck. And all you have to do is track your expenses for the year. You're going to put it in your cash flow manager so that at the end of the year, you're going to have over $20,000 in expenses that you're going to be able to put on your 1040 form, which is going to be attached to your Schedule C, which is your profit and loss statement. And I mean, even if you make a lot of money in my econ, you're still going to benefit for the write-offs, because if you make a lot of money in my account, let's say you make another 5,000, 10,000, 20,000, 40,000, or you replace the income from your job in your my account business, use that money and put it into your retirement account, and you still get to write that off. So just having and making income in your business does not necessarily mean that it's going to hurt you come tax time, okay? So this is the power of income shifting. This is the very first strategy that we teach you in my econ, and just by doing this, you're going to put yourself in position to be able to change your financial landscape. So if you have any questions, please get back to the person who invited you to the business, and they will make sure that all your questions are answered. Thank you and have an amazing day.